Hey guys, Jim Keaty here. I'm here with my really good friend, also Shumaker with Louisiana Home Lending, and he's got some big news this week. It's been a crazy 8 weeks that we've been living in, and there's been so many ups and downs in the market. But for the most part, buyers are back, and they're back in a big way. We've got lots of buyers out, and one of the reasons why is what Austin is about to share with us today. Austin, tell us what the big news is this week.
Yeah, so I'll kind of do a quick recap. So, coronavirus kind of starts impacting things, a lot of economic news, rates kind of go haywire for a minute, they skyrocket, they go up, down, sideways, every which way. We've seen them normalize, come back in line with where the market is dictating that they
And Austin, what is normalized right now?
So normalized, basically what I mean by that is that they're coming back into center with where, the treasuries and mortgage-backed securities dictate that they should be. And I guess, are you more so asking what the specific rate would be?
Yeah, I mean, I guess explain that a little bit more, because I think that's important, because you have the Feds dropping rates, but it doesn't necessarily immediately impact the mortgage rates. And so explain that a little bit. And what do you mean by normalized?
Yeah. So, coronavirus happens, rates go up because there's no demand for, the underlying assets on the secondary market. Right. And it's just risky to do mortgages because we don't know what's happening. Well, we've got some certainty in the market, right? People are buying, people are kind of, unemployment claims are finally starting to go down. And, rates are kind of hovering again from the 2.5% range to the 3.5% range where they should be, where previous to that, we were approaching 5 again, Yeah.
Well, that's insane to even think about. We're around 3 or 2, even in the 2s.
Correct. But, I mean, it's everything from purchase, refinance. I mean, you can literally get a 2.65 rate on a 30-year mortgage today. It's possible. It's out there. Wow. So some of the big news that you alluded to was as a wholesale broker, we have access to a new program through United Wholesale Mortgage. It's called Conquest, super aggressively priced to enter the marketplace with 0.5 all the way up to 2.999.
Right. Say that again, because I think we broke up a little bit, but starting from 2.5, is that right?
Yeah, so starting from 2.5 all the way up to 2.999, and that is the rate range on this particular product.
And is that for 30-year fixed? What are we looking at?
That's 30-year fixed or 15-year fixed. We have those ranges in both of those programs. Actually, on 15-year, we can go down to 2.25. We have that rate available.
Holy cow, man!
Yeah, it's insane. I mean, this has never happened before.
And so this is happening because the government is trying to provide programs to stimulate the economy, I'm assuming?
So one of the big underlying things is, coronavirus hits and there's a lot of uncertainty. The Fed starts moving to buy mortgage-backed securities, which really is what sets mortgage rates. So not Fed rates, that's more consumer credit along those lines, your HELOCs, your credit cards, things of that nature. Mortgage-backed security supply and demand is really what dictates where the market and where mortgage rates are going to be. So the Fed moves to start buying big tranches of those mortgage-backed securities to really help kind of stimulate the marketplace. And that's what we've seen, and they've done a really good job at it. And it's helped to introduce rates like this and programs like this that ultimately help the buying power of the consumer. And people, with refinance options.
So take me through, who is going to benefit from this program? Do you have to have a 800 credit score to get one of these programs? And what kind of price ranges are we looking at?
Yeah, so price range, we're going all the way from, your $100,000 loan all the way up to 510, 400, which is the max conforming limit. In terms of, requirements.
So the max is how much again?
$510,400.
510, and then anything over there is jumbo,
We would fall into a jumbo, correct?
which is a whole nother story, which I want to ask.
Whole nother
ask
story, especially right now. Those programs have gone and dried up.
Let's talk about this first, and then we'll
Right.
get into the jumbo loan. So,
Sure.
what kind of credit scores and what are you looking at? Is this just for the A plus buyer, or is this for just your average Joe?
So this is going to be geared towards the more A paper client, 700 FICO and above. But that's not to say that we don't have other programs that can be utilized for people with sub 700 credit as well. And the rates on those are still in the high twos. FHA, USDA, VA, those are going to be in the high twos, low threes as well. So all good options.
That is incredible, dude. And so, what are we looking at for the Conquest program? What are we looking at for a down payment? What's the minimum down payment for these properties?
So minimum down payment on the program is just like any other conventional loan. First-time home buyer can go, as low as 3%. Typically, what we're seeing right now is a range of 5 to 10% to elicit the best rate possible. But again, if you fit into a regular Fannie Mae or Freddie Mac program, you're going to fit into Conquest.
And so, but if you don't have that much down payment, you always can jump into the FHA.
Correct.
Or rural development. Have those? I know during COVID we were seeing some of the restrictions tightening on credit scores and raising credit limits. And are we seeing any let up on that, or is the pressure releasing in those regards?
Yeah, so I mean, you're exactly right. We saw, a squeeze and a tightening of credit requirements, where we maybe could go down to a 580. They said, hold on, we're not taking anything right now below a 640 just because of our risk appetite. We're seeing some of that being relinquished. We have a couple lenders that are going down to 600 now. And even a couple starting to dibble and dabble on an exception basis down to 580 again. Now, they're very few and far between, I'll tell you, just because of the pricing on those individual programs. They can be tough to get done, but hopefully in the coming weeks, as the market moves to stabilize even more, we'll see some of that stuff open up and continue on this trajectory.
So tell us a little bit about there are some conditions for this. I mean, this Conquest it's huge. It's huge
Right.
for the mortgage business. I know it's already generated. It just was launched. What was it? Tuesday?
Yeah, officially this week.
May 21st or something, which 2 days ago. How many deals are you working on right now on that?
Yeah, so I mean, just in the last 48 hours, we've submitted 9 of these deals, we don't really see it slowing down much. It's such a great program. A couple of the constraints, it is, we do have to stay in some confines because the rates are so attractive. So we have to make it, we got to get these things in and out, right? So a couple of things, typically you'll lock a rate anywhere from 30, 45, 60 days. This particular program, our only option is 22 or less days. So we're pretty limited on that, but we're efficient, we're fast. If we have our stuff, ready to rock and roll, we can close it in as little as, 11 to 17.
Well, and explain that for a second, because I had a question about that earlier. You really clarified for me. It's not that you have to find your house, put it under contract, and close in 22 days. Explain the process there. Right.
So I'm going to take you, longitudinally through the process. So, you go under contract, you have an accepted offer. Suddenly you figure out I can get this great rate. Well, wait, I got to close in 22 days. Not the case, right? We can float that interest rate and not officially lock it for as long as we want or deem necessary until we see an opportunity. So for example, we get the appraisal back, or we get through inspections, or we get the title work back. And then we say, okay, look, here's where we are, here's where the rate is. We'd recommend locking it in, and then we move forward with the process and go to closing.
Yeah.
So there's ways to mitigate that.
So there's time, you have time to buy it, but is there a risk of it expiring while you're under contract?
So if in the event that we do, lock the rate and something pops up and we go past that 22 days, or we're right on the fringe there, the program gets pretty tight in terms of the requirements after you run out of that, expiration period. And it does get pretty expensive and pricey, the further you get out. And that's just a function of it being so aggressively priced on the front end, is that's how we've been able to do that.
And give me an idea of, like, I know you can get a much better interest rate at the 15 years versus the 30 years. What are you seeing, and what are you recommending for most home buyers right now? Since, in essence, they potentially can, if they go 15 years, they can save really like tens of thousands of dollars in interest payments over the life of the loan, at the same payment they were before COVID.
Right.
So, I mean, are you recommending I guess everybody's different, but like, what are you recommending for the most part? Either increase your purchasing power or pay less.
Yeah, and Jim, what I would tell you is it's very, very situational. A lot of times what we're doing right now is, look, there's a little bit of economic uncertainty going around, a lot of job loss happening. So, when it's very situational. So, it's probably 50-50, 50 being, hey, let's stay on a 30-year amortization. The rate's still low. We can still make extra payments to principal, and we can pay it off in 15 years. And, just have that extra flexibility while staying on a 30-year am. And then the other, 50% is saying, well, no, heck with it. I want to do a 15 or 20.
Right.
Or, if I'm in a position to refinance, look, I've already made payments for 3 years. I don't want to add 3 more years to my loan. I want to go on a 27-year am. We're doing that too. So you have options.
Yeah. Well, I know you got a flyer show us. Why don't we run through what
I'll pop that up on the screen.
Give people a visual of what we're talking about.
Yeah, so as we were kind of talking about earlier, rates are, as low as 2.5%, in some cases on 15 years down to 2.25%. And again, these are conventional Fannie and Freddie loans, 30, 20, 15-year fixed, can even be customizable amortizations. And yeah, I mean, again, if you can qualify for a conventional loan, you can qualify for Conquest.
And repeat what the down payment is usually on required for the Conquest?
Yeah, so as a first-time home buyer, it can be as little as 3% down. What we've been seeing most of the time is a 5% down product.
So, like, at 5%, just to give our audience an idea of what we're talking about, on an average $200,000 house at a 5% interest, 5% down, 2.5%, you're looking at principal and interest payments of $867.
Right.
Now, that doesn't include your taxes and insurance. You can add another couple of $100 to that, but you're still hovering around $1,000 a month for a $200,000 house.
Right.
It's an incredible program. Austin, where can they get more information about the Conquest program? And not all bankers or lenders are able to provide this. Go through that real quick.
Yeah, correct. So this is an exclusive program through one of our partners, a wholesale lender, the largest in the nation, actually, United Wholesale Mortgage. So contact your local broker, mortgage broker. You can reach out to us, Louisiana Home Lending. You can reach out to our website, phone number. We're in the office. So yeah, let us know if you have any questions, want more information on it, anything.
And Austin's information is at the bottom of this flyer, and we'll put it in this post as well. Now, let's talk about what is not really happening right now, which is the jumbo loan market. Give us a overview of what's happening in the jumbo marketplace and why it's happening, and when can we expect it back, or when are you guys predicting things to get back to normal?
Sure. So the jumbo market, again, like we were talking about earlier, is anything above that 510 for an loan amount. And before COVID, that was like a really thriving market. We were finally seeing some really cool programs where you can put as little as 5% down on these programs with no mortgage insurance, up to $1 million, $1.5 million. And that stuff is just gone away overnight. In place of those programs, what we've been doing is first and seconds. So we'll do a first mortgage up to that conforming limit of 510, 400, and then we'll do a second, for the remainder.
So this is something that actually we used to do a lot back
Right.
in the early 2000s and up until 2008 until the market crashed. But we used to use that. That was a product that we used all the time, and not just for jumbo loans, but we saw that a lot where you could do an 80-20, and that completely went away for a while.
Yeah.
But now it's actually a product that's coming into use. How do they pick and choose what these things, and how do they take them off the market and then bring them back on? I mean, what's the deal with that?
Well, so basically there just needs to be stability in the marketplace. And they've basically taken them off the market because of risk appetite. It's risky to loan on these higher end properties. Just because there's uncertainty in the market. I think as soon as we get some certainty back in the marketplace, the economy gets opened up at full capacity, we'll slowly start to see these things reintegrated just like everything else. I don't think this is another 2008 where it took years for these programs to be entered back into the marketplace. It's going to be like, I think, every other sector of the economy where, it's more of a V-shaped recovery than anything else.
Yeah, well, man, this is really exciting stuff. It's an exciting time too, because we're seeing things that we've never seen before. However, there's always going to be some things you need to watch out for. I know we know what's coming. I'm an economics major, and we know that when you print trillions of dollars, inflation has got to affect us somehow. And I was reading an article today actually, and it was one of the chief economists of the National Association of Realtors, and the question was, should we expect inflation? And his answer was, yes, we should. We are going to see inflation. We are going to see an impact from this, but it's going to be probably 2 to 5 years from now where we really start to see everything increase in price. Everything, all of our goods are probably going to be more than they are today 5 years from now. But what's not going to be more? Your mortgage. Your mortgage is not going to be more. And so it actually gives me goosebumps to think about it, man. You can actually get into a house right now, lock in your mortgage for 30 or 15 years, and inflation does not affect that.
Right.
So when everything else goes up in price, including your houses, your products, and everything else, you could be sitting pretty with $1,000 note on a new house.
And that's the thing. It's, buying power has never been stronger, ever in the history of the industry.
Man, I really do. I get goosebumps thinking about that. It's fabulous. But one of the problems that we're having right now is that I don't think the sellers really realize that, because we're seeing a lack of inventory. The buyers are out. We put more houses under contract than this. I think this week is going to go down for Keaty Real Estate, at least in history, as a record week as far as under contracts. Right. And yet we're not putting as many listings up. And so what's happening is we have more demand, less supply. There's never been a better time, believe it or not, to list your house. Now, not in every price range. If you're in the jumbo price range, it's not an amazing time to list your house, because the financing is harder to get, and you have to get a little more creative with trying to close those loans. But if you're under that $500,000 mark, pretty much across the board, there's more demand. And so I guess the message is, I want to let the sellers know that, and we've gotten this question a lot. They're like, Jim, I know that what's going on. Should I even put my house on the market? And there's more uncertainty in the future than there is right now. And so I can definitively say that if you're thinking about selling, you need to do it now, because we don't know what's going to happen in 6 to 8 months, and we don't know what the impact of the oil industry and the energy sector is going to have on our economy. But right now, if you're a seller, you should put your house for sale. If you're a buyer, you've never had the opportunity to buy, and it's never been this affordable. So you absolutely want to also start that process. But Austin, this does work for refinancing too. Doesn't Conquest
Yeah,
apply?
so it's a refi and a purchase program. You're correct.
Yeah. So, and you do refis
Yeah,
as
so
well.
and I actually misspoke earlier, Jim, on the 3% down for Conquest. It's only five, 5 and greater. But there also is, 3% down options on conventional programs, just not specifically to Conquest.
Sure. Sure. All right, man. Well, anything else you want to add on this program or any other program or what you're seeing? I feel like
Yeah,
there is
so
normalcy happening.
yeah, we are, man. I would tell you, 6 weeks ago, our purchase application volume of mortgage applications just tanked. And last week, we had the single most applications ever as a company in over 2.5 years of being open as a company that we've ever had. And that's purchases. About our loans in process, we probably have about 38 right now. About half of those are purchases, which is great. We didn't see that 8 weeks ago at all.
Yeah, y'all
So
were doing a lot of refis because the interest rates
correct.
were fluctuating low, but now you're
Correct.
starting to see people come back and actually.
Yeah, people they're entering the marketplace again, which is it's great to see.
Well, man, I can't thank you enough for taking the time.
Yeah, thanks for having me.
With us today, and we really, really appreciate your expertise. One more time, if somebody wants to get a hold of you and find out more, where should they go?
Yeah, LouisianaHomeLending.com. You can find us on Facebook, Instagram, LinkedIn, YouTube. My office line and cell are listed below, as well as my email address. So if you guys have any questions, comments, or anything on the program or otherwise, give us a ring.
Austin, thank you so much, man. You are
All
the
right.
man. I appreciate it, dude.
Thanks, Jim. We appreciate it.